The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman here. Welcome to the Monday edition, first day of the week of the Tiger Technicians Hour, April the 22nd, that's it. And very interesting market this, because on Friday that was very good action considering that IBM was down very sharply and 7-8%. GE was down sharply. I've got my Dow Cortez. What do you got? You got GE down, you got IBM down, and then Triple M and UTX are holding very well thus far. And I think UTX comes out with earnings tomorrow. So this is going to be a very interesting thing. And what I've found, and I discussed this last week, is that when I'm looking at the market this closely, and my technical indicators give me price entry points on certain stocks that have had really good action, and then that action fails, even if the stock is really just going sideways in a consolidation, but the fact that it hasn't gone higher, I respect that, and I say, whoa, that is when you've got to be the lightest on the long side, and you've got to start looking at the short side. And that's exactly what I want to be doing here. I missed an entry point on one long position this morning. It didn't quite get to the point, and the stock is acting extremely well right now. That's telling me that this is still a rotational market, very selectively long. If you're long on the long side, we still have a couple of longs. The two that we have, core positions that we're just holding, are actually doing very well. Now, what's really interesting as far as I'm concerned is that on the short side, stock that I have on the short side, it's attempted day in and day out. It keeps trying to rally, and it gets repelled by the 9-period exponential moving average. And what is that saying? That's saying as long as you've got your marker, as long as you have your GPS, your guidance to say those are the levels of support, those are levels of resistance, I think we can handle this market. Most importantly, I'm going to run the numbers. The Dow's down 52 at 14,494. S&P's down 2. Now, you see there's this big discrepancy again. Well, let me just check here to see what Caterpillar's doing. All right, at this moment, if you're looking at my charts, you can see I've got I always put the daily up of the E-minis. That's the S&P E-mini futures. This is the June contract. And I've got the 120-minute chart. Look, it went to a peak D. Right on that, I'll show you right now, the dashed... I don't know what, I'm just looking to see what it is here. It looks great. It's actually kind of a pinky color, kind of a goldy pinky color right there. That's the 200-period moving average. Repel, repel, repel. That's what it keeps doing from that level. And the E-minis and the 9-period moving average is also at 50, 52. Resistance, the E-minis are right now at 1547.50. So that's, I'll repeat it again. We've got a market that is very selective. We call it a bifurcated market, in that there are stocks that are decidedly down, moving down, and there are stocks that are actually holding very well or moving up. But the overall scenario, as I'm looking at it, is saying be rather careful at this particular point. Because, and let me just run this now that I've got this up. You've got the S&P, which is down only 2. The Dow's down 58. Let me just quickly check and see which of the Dow stocks, if I can, right here. Dow stocks are acting well. Microsoft is down. Microsoft, when the weakest of the weak suddenly shows some strength. That's rotational. IBM's back down again. Boeing's down. Yeah, now that they're talking about resolving the problem with Boeing, I would not be surprised if we are looking at Boeing starting to have some air pockets of its own. It was running up on rumor. Now, on fact, I think it's going to be coming down. That's just my impression. Peak D in the daily. I have a potential peak F in the weekly and an E. Well, I'm going to call it a C just to be safe at the moment in the E/C in the monthly. But this is going to be really interesting, because it would not surprise me if Boeing, after all the hype, hasn't really resolved the problem to the satisfaction of all the airlines. They've got a fix. A fix can be a fix. But a fix is not a brand new resolution that says we've got absolutely resolved the problem. So I'm going to be watching Boeing really closely, and I'm just trying to find out what is giving you. CVX is up a little bit. All right. Well, the story is that, there we go. Microsoft, huh? Microsoft can't be such a big weight in the Dow that it's holding it up. Okay, what's down? Most of the stocks are down. Boeing's down quite sharply. That's important. And IBM is back down at 178 again. Yeah, so those are the weightiest stocks. Those are weighty stocks. And even Caterpillar, which is a guest artist to my Dow Quartet, GE, IBM, MMM, and UTX, is not acting that well. So let me just run these down now. I wanted to quickly look at the IWM on our list of stocks to look at. And what's important about the IWM is that I still have that peak C in the weekly. All the others have given me, oh, wait a minute, ABC. Oh, wait a minute. Oh, I just finished the Russell 2000. I finally got it back on my list here. There you go. The Russell 2000 is giving me a much clearer picture. I knew I had to go to that Russell 2000. Mostly I've been working with the IWM, and I'm getting some readings that I just wasn't sure it was a brand new buy mode in the weekly or whether it was a continuation pattern. But this absolutely clears it up. The IWM has made the peak D in the weekly chart. That's important. Why? Because the SPX has made a peak D in the ChapmanWave. And what does that mean? It means that if the S&P could not all of last week make a new recovery high above 1597.51, if there's a close underneath the 9-period exponential moving average this week on Friday, 4 o'clock, and the MACD finally turns down in the weekly chart, and the stochastic goes from 84% where it's at right now to 79 or 78, I will have a sell signal in the weekly. I already have a sell from action today. I wait until the close, but I'm likely to go right from a sell signal to a sell mode in the daily chart of the Dow and the S&P. The weekly chart has made a peak D. It's made a peak D in the Russell 2000 index, not the IWM, the Russell 2000 index. It's made a peak, I think it's more extended, in the there it is. Peak D in the weekly chart of the New York Stock Exchange. Now look at the pattern in the daily chart. You see that what I call a right arm extension. What is a right arm extension? In my CD introducing the ChapmanWave methodology, it's Chapter 21, slide 362 and onwards. Actually, you can find them all over. This is where it's really discussed in great detail. I'll just show it to you here. This is what it means, that very often you get a kind of a cup formation, make a new recovery high. It looks like that up arrow was correct, but what happens is it goes from a C, I usually call it a gray C. I've found over the years, since 6 years or 7 years ago when the CD was made, that when you get a confirmation, you're going from a C, potential C, to a potential E. When the stochastic and MACD do turn down, it goes to the peak E. That's when you put the little hat on, the little cap. Instead of the down arrow, you've run out of down arrows, so you put the cap, and it's a right arm extension. Why? Because only one of the technical indicators was giving you a confirmation, and that's exactly what's happened here in the daily chart of the New York Stock Exchange. This is isolated single leg up to a D. Look at the MACD and stochastic, very poor. But right as it's running, the stochastic goes right over 80%, but only for about 2 days, and then it pulls back. I'm very cautious right now. I have no choice but to be cautious. Now let's go to the... Now we want to go to gold. The GLD, well, gold right now is up 20-something points, 27 points. This is the pattern that I was looking at the GLD, and I showed subscribers the other day that the GCM, which is the gold contract, the June gold contract, which I'm still using now, I'm not sure what people are trading, showed from the stochastic and the MACD that there was a positive divergence between the slow stochastic and the price coming down. There should be a rally, and that rally should go to the 9-period exponential moving average. Plop, it goes to the 9-period moving average. It's kind of pulling back. I shouldn't say pop, I should say pop. And then what happens? It pulls back, and this is going to be a key moment. Why? Because the MACD has so much, the fast-moving average has so much work to do to be able to garner strength, to be able to push above the, let me just do this for a second if you don't mind. There you go. To push above the fast-moving average, above the slow-moving average. The histogram, those little red lines, they are moving up, but it's not even close to the 0% line. I'm considering that this is a counter-trend bounce in gold. We'll know a lot more within 2 to 3 sessions. Now, what's really important about the gold, about the GLD, because gold, of course, trades through the night. GLD only trades through market hours, 9:30 to 4 o'clock, or maybe just a tad after 4. That hasn't touched the 9-period moving average at 138.96. And if that's the case, what we're going to be looking at is how does the stochastic get, or can the stochastic get above 20%? I'm looking at the GDX, and the GDX is saying, I'm really struggling. I've even got enough strength to get to the 9-period moving average at 30.12. So this is very important for the gold contract. Is this just merely a momentary flash in the pan with a pop to the upside, then it continues down? Or is this going to develop into something more serious in terms of time, maybe not so much in price? We'll find out soon enough. Silver, so gold is at 14.23, silver is at 23.34, up about 38 cents. Platinum is up 5 at 14.32. Now the HG, I'm going to the end contract, the July contract in copper. That candle from 3 days ago, if it takes out the low of 3.07 in copper, I have no choice but to move over to the weekly chart and say, wow, that candle, the wick of that candle, especially when you've got a left side, right side price time match going back to 3.1175 back in October of the week of the 21st of 2011. Look at the way, remember, patterns repeat over and over. In the ChapmanWave methodology, my CD introducing the ChapmanWave methodology, there's a pattern that I call the dreaded H. Let's call it the H pattern. And what it says is at a certain point, the price keeps coming down, and it makes the H and it fails the left side. It goes lower than the left side low bar. Lowercase h, that is. It keeps doing that. At a certain point, what it does is it makes the M pattern. And that M pattern has a whole bunch of connotations. Well, look at this. The big H, yeah. Mitch says in the den. That H went to an M pattern, and that M pattern says invariably you will break below. How you handle the break below and come back into the arch and hold or fail is absolutely critical to what happens over the next many bars. So let's finish this up. Bonds are only up 0.08, and the dollar is up 10 cents. And I'll be back. Basil Chapman, Tiger Conditions Hour. Call me at 877-927-6648.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and what are we looking at here? We're looking at a Dow that's down 72, S&P's down 3.44, still stronger than the Dow, just as it was very much so on Friday, but pulling back, being dragged down actually by the Dow. Now let's go to our first caller. We've got Travis in St. Louis, Minnesota. Hi Travis, how are you? Oh, Missouri. Wait, that's Missouri, right?
Missouri.
Yes. Good. Now, there used to be a senator. What was his name from back in the old Watergate days? Wasn't he from Missouri?
You know, I couldn't tell you.
Senator, I'll think of his name now. Oh, crusty guy. And he just asked these great questions. Senator, well, whatever his name was. So let's go to what would you like to look at?
We're looking at Cadence Pharmaceuticals. I actually talked to you about this a couple weeks ago. I don't know if you remember that or not.
Yes, I do. And then it ran up a little bit, and it's pulled back.
I actually want to update you on my positions. I actually went ahead and just sold it all. I didn't worry about the long-term capital gains like we were discussing. I sold it all at 705, so I'm completely out of it. And so I'm gonna wait for probably several months, because I think I'm going to get a lot better entry over the next 6 months or so on a decent retracement. But I just wanted to kind of get your thoughts, look into your crystal ball as to where you think this thing could pull back to maybe over the next 6 to 12 months.
Okay, actually, you were probably correct there when you say crystal bar, because this is the point where I'm looking at it, I'm shaking my head, and I'm saying, okay, I believe I know what's going on. I'm prepared to sacrifice maybe 3% on to the upside at this particular point, because I think we're getting to a stage where the percentage to the downside could be greater, especially if I've got peak Ds in my weekly charts, as my ChapmanWave song goes, buy at the low and sell at the high. The third verse says the wave goes to A and then to B, and even with your CADX, which is Cadence Pharmaceuticals, it made a peak D because of the last week's action below the high of 719, and you're fantastic. You got out almost at the top. That was a great way to trade this. I believe you're correct. Here again, even if it goes a little higher, that 200-period moving average is so strong, and the 9-period moving average at 635 is so strong. I think you're correct, because the song goes, even the anticipated C and D, that's when it flashes a cautionary light. That's at peak D, and that's where you've got to make your stops all real tight. And I've drawn what I think is the pattern that I'm looking at this particular point. Folks, what we're looking at is Cadence Pharmaceuticals back in, let's see, that was an up arrow, so that's right there. That was the 22nd of February of 2013 at $4.45. It started a really strong move. I've just got to double check, 82.76. How did I miss that? I shouldn't miss that. That's ABC. So that actually went to a full D. Oh, isn't that interesting? So this is really a brand new buy signal. Oh, it's even clearer now. Good. So let me do this. I'm just making some changes along the way. I don't know how I missed that. Sometimes a trend line overlaps the peak, and I don't get to see it as clearly as I should. And so there it goes. Oops. I'm doing this very quickly. Slow down. Make haste. Not waste. No, whatever the expression is. Here we go. Get rid of those guys. And now I think I can tell you a little bit clearer in the sense that A, B, C. Now, what I have drawn here is a pattern that I think I discussed with you that looked like it made a leg, made the body, should have the neck above the candle of the 5th of April at 7:01. And that went to peak D, and then that's the neck, makes a head pattern. Well, sometimes the head pattern is just the bar that comes down, and the B goes into or underneath the low, which was 641, which is the low of the body. Now what I've drawn a rectangle formation, and what it says is that there's a good chance that based on the 120-minute chart, yes, that there's a rally that takes the form of a brand new buy mode within that rectangle, and it climbs in a stair-step manner, that's the way it works, towards the previous high, and that high then becomes a repellent zone, and it starts to come back down, and it can't come back down all the way to or below the rectangle low. And that rectangle low is the one that I said, which is at $6 and what did I say it was? $6.28. If it breaks that, then the way the weekly is looking is that the 635 is the support to hold. You know what? I'd like to look at this a little further, because my weekly chart, my monthly chart, and in fact the weekly chart are still quite strong. So I think you're going to get a good entrance. Let's see where we can define it as maybe two positions. So I'll be right back, folks. And we'll be back with Travis in St. Louis, and we'll be back with Ken in Fort Madison straight off this break. Dow's down 67.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and we're on with Travis, and we are looking at CADX. This is symbols trading at 691, down 0.5, down 5 cents. Cadence Pharmaceuticals, and Travis had a great trade. He's out the trade now. And he's waiting for a pullback to see whether or not he wants to get in. He's prepared to have patience, and I like that. On a very short-term basis, and I don't think, to tell you the truth, I'm not sure whether to tell you to trade it because it would change your trading pattern, and it would change also your thinking, because you'll have a trade that's on the long side, and in the meantime, you're busy waiting for a pullback of about 10%. So I don't want to spoil that. I just wanted to say to you that if I was looking at this objectively, had no idea whether or not you had the trade, you just said to me, what would I do? I would say to you, it has the potential right now to go from $6.92 to $7.19. That's a nice percentage gain. I'm not sure if you actually want to trade it, but on the downside, the support that I'd be looking at is pretty much what you've been talking about. Mostly I'd be looking at the bottom of this candle, and that's the candle of the 15th, where it went to $6.28. My suspicion is that if it does pull back, the moment it takes out 656 low, that's the low of the 18th 3 days ago, then it's going to head towards that level. It might still bounce, but it has the opportunity, at least the chance, to just go a little higher first, 10 cents, 15, 20 cents. So I don't think it's really worth playing, not in your situation. And as a possible peak D in the weekly chart, the stochastic's at 94% and the MACD is still good. That's the only reason why I would have said to you, I would actually like to have a small position in this stock, and it would not be as a trade per se. It would be more as a GPS to tell you, because if it breaks above 723, the next pullback actually will be much higher. The next pullback will say that it might not go to the 200-period moving average before moving to the... I've got a price, left side, right side price time match. One is now passed. That was on the week of the 29th of March. That would have been at 778. It never got there. But the dashed line, if you can look at my charts, you can see this dashed line. It says that it's like a magnet, and it's going to try to get to the 738 level. So this is what I'm going to suggest to you, because you've got some really nice gains. If you want, don't jump into it. Just think about it. You can add just the smallest little position right now. It's a kind of a feeler position, and it's going to tell you whether or not it has the potential to test the 778, which that's a nice percentage gain, right? So I don't want you out the stock if it's going to break above a 719, which was the high. So you've got really nice gains. My only suggestion is that it hasn't shown any real weakness either in the daily has a little bit of weakness to it, but the weekly chart is my benchmark. That's the bigger tide, and the monthly is also very good. I don't want you out the stock when you've done so well, when you like to look at the big picture. Therefore, I'm suggesting, don't have to do it right now, but think about it. Maybe sometime today or tomorrow, you might want to just add a small position. And I call it a pilot light position, because it's going to give you so much information. Because if it breaks above, it closes 1 penny above 719, the high of what was it just a few days ago? That was a week ago, just over a week ago. Then and holds, then there's a chance that it could move higher. If it pops up there and then it pulls back into the 690s, that says, oops, that's that pattern, that rectangle pattern. That says, be careful, it could come all the way back. Hey, the weekly chart is the one I'm looking at. I'm impressed so far. So you understand what I'm saying? I don't want you to miss out waiting for a pullback if, in fact, the strength is still there. So I'm just suggesting maybe get a tiny little position, and you can have a stop at 693. You can have a stop at 680, 15 cents or something. But that's my recommendation, just so it gives you a feel for whether or not you want to add to the small position if it breaks and holds in the 727 area. That's all.
Okay.
Hope that helps you, Travis.
I mean, I like the company fundamentally over the next 3 to 5 years. So I'm
that's what you said.
Over the next 6 or so
right.
months we get
and Travis, this is an area that's been doing very well. The whole pharmaceutical biotech area at this particular point. That's the reason why I'm saying maybe you can put a little bit back and just treat it as a feeler to be able to gauge everything else. So great trade. Nice profit.
Hey,
Thanks for calling.
And real quick, if you get a chance before we have to sign off today, ISRG, do you think there's any shot that thing goes after 455 this week, and it could be a nice weekly option play on it?
Absolutely, I've got it right. It was on my list today. I just didn't have I looked at so many stocks over the weekend. ISRG was the one that I thought had the most chance of pulling back, but I haven't done anything with it. I'll be looking at it again later on. But I tell you what. Do your analysis, and in my analysis it says daily is weak, weekly is weak, and monthly is weak. So there you are. So I'll do a little more later on if I get a chance. Thanks for calling, Travis. Bud. Let's go to Ken. Ken in Fort Madison. Hi, Ken. How are you?
Good morning, Basil. Thanks for taking my call.
My pleasure. I'm sorry to keep you so long, but thanks for holding.
That's fine. I'd like to have you take a look at SLW. I don't have a position. I'm looking for an entry point.
Okay, folks, SLW is Silver Wheaton. The monthly chart from this month, having been repelled at 31.55 from the 9-period exponential moving average, it's trading. SLW right now is at 22.67. This is a silver stock. It's down only 6 cents, but That's terribly disappointing action after what should have been happening. So the monthly chart is absolutely a decided downtrend, which says that I've got 22.95 as a target, and it's already hit 21.79 over the last few days. So the next target would be the doji candle of between 21.58 and 17, looking out on the monthly. Now let's go to the weekly chart. Weekly chart says if ever there was an opportunity for a down channel, well, it's actually more it's a double line downtrend zone area. If ever there was a chance for it to find some support, you're getting into it right here. The MACD is still very, very poor, and it's had a huge volume. It had a volume explosion last week, and that was with the low of 21.79. And the stochastic is at 7%, which is showing no strength whatsoever. So now I have to go to the daily and say, okay, daily, you're the rudder in this whole thing. You're the one that's going to have to see if we can turn around. And what it said is that the move on Thursday was the first sign that there could be a decent pop-up. I call it a pop-up. So what happens, it pops up on Friday, and then it gives most of it back. And today, instead of going above 23.63, it's within the same zone. So now it tells me the very quick thing to do is I grab my rectangle formation, I put it in there, and I start to draw bumps. I start to draw the H formation, arch here and an arch there, and we'll see. And that to me is going to be a bigger arch the second time. And that says that if Silver Wheaton is able to hold and close towards the high today and then break above 24.40 by Wednesday or Thursday, we've got the chance. Now it's not a V-shaped bottom, but the chance of an series of arch formations forming. That's number one. Number two is that in the pattern that I'm looking at, the 9-period moving average at 24.39, it has to hold and treat that as a support, and it's broken down. It's been under it all this time. My on-balance volume is saying we're getting close to some kind of a reversal. I'm trying to find the relative strength index has said, yeah, there's a little bit of a divergence because it's slightly positive compared to my on-balance volume. It's closer to aligning with the stochastic. So here, this is what I'm thinking. If you're looking for a trade, and my suspicion from the way you asked the question, you're looking for more than just a bounce from the 22s to the 24s. You're actually looking for something that lasts maybe 2-3 weeks, that actually takes it to 27 or 28. Would that be correct?
You're exactly right.
Okay. You see, if you're looking for that, I don't think this is for you right now, unless you're prepared to say, you know what, if I buy it here at 22.67, I can make that money only if it breaks above 23.63, the higher Friday, and I quickly take out a let's say a 1.5 to maybe almost 2-point gain, wait for a pullback, do it again in the 23s for a bounce to the 24.5, 25 area. Therefore, you've made up your money. But that, I don't think is really what you're looking for, because I'll tell you why. If gold and silver start to break down after this and retest the recent lows and break under it, it means that, yes, you could get a rally, but it makes the upside even more limited. So I don't think that this is something that I would put a position on. I'd trade it as just real short term, take a 5%, a 3% and a 5% gain, grab it, get out, try it again. One of them is going to miss. But I don't see, if today's action is very positive at the end of the day, and instead of being at 26.66, it's closer to 23.12, or it's even made a new recovery high, then I'm going to say to you, you know what? Small position, treat it as a trade, and just raise your stop, let it go where it's going to go, because by all accounts, it should try to fill the gap between 24.97 and the low of 26.05 on the 12th of April. This is struggling. I just don't see it. I had a gold stock for subscribers the other day. We bought it perfectly. I tightened up the stop. We took a 20-cent loss on a $33 stock. It's very tiny. It's less than 1%. And then this morning it looked fantastic, and now it's giving it all back. And I'm saying, if the gold stocks don't participate, this is not good news. They came down first. They should be leading, and most of them are not. I just did the GDX. So I'm going to suggest, and I could be totally wrong because it could gap up tomorrow, and then you're going to say, oh, man, that guy, he just gave me the wrong information. But if anything, I would say if you want a tiny position, just to get a feel for it, but with the action today, I don't have anything that says to me that there's no bullions at all in SLW. If anything, it looks like there's still further selling. So I hope that helps you, but I just don't see it. And also, as far as the bigger trade is concerned, I'm probably going to have to wait for the weekly MACD to start improving, so that even if I miss the actual low, I would much rather trade the trend of the stochastic moving up than the MACD and stochastic moving down in the weekly charts. So I hope that helps you.
That's very good, Basil. Thank you. If you have a chance, take a look at FCX, will you?
FCX, I'll do that right now because we've got a moment, and I'll still be able to get to the. See, FCX is almost the same thing. Now, I don't have this. I used to have the whole thing, of course, notated in great detail because it was a stock we followed in day by day as it soared back into 2008 up to the 60s. I think it might even have split. Let me do this. A, B, C, D. You see, it's got that pattern. The 200-period moving average in the monthly chart of FCX, which is Freeport McMoran copper and gold, is at $27.95, down 29 cents, and it looks like it's testing the 200-period moving average in the monthly chart, which is right at the 27.24 area. So far, the MACD and stochastic are saying nothing yet there. The weekly chart, almost like silver wheat, is headed down, but there's a slightly better chance that the 27.24 level will hold this week if Freeport McMoran can get over the high of Friday, which was 28.51. Oh boy, this is a toughie. This one, Freeport, is a copper and gold stock. In both those areas, if this thing was moving much higher, I would have much greater confidence in the shorter term in the general market, because they'd be saying, great, buying in copper, that's a good sign. Buying in gold, I kind of like actually buying in gold as a market precursor for higher levels much of the time. So, and then Dan Zital says FCX is buying PXP and MMR. I remember that now. So maybe there's a lot of debt that's being incurred here. I just don't see it. And once again, if you're looking at this as a longer term trade, I just see 31.22. I don't think you want to have a 2-point bounce and then a pullback. So I'm going to say here again, hold off. If by Wednesday I see some better signs, if you're seeing some better signs, give me a call. Let's look at it again. But right now I have to give it a pass. I'm just going to say no.
Thank you so much, Basil, and you have a good day.
Thank you very much, Ken. Thank you for calling. That was Ken at Fort Madison. And I'm going to go to ISRG. I just want to talk about this for a moment because there was a report. I didn't see this on CNBC, but it was advertised that something about the doctors, and there were some cases that went badly with Intuitive Surgical. When you read deeply into that story, there are only a few cases that were very negative. I mean, they actually do fabulous work. But when I asked my wife about it, who's a physician, she said, yeah, there's just a question hanging out whether or not the robotic surgery is in fact better. I'll be back, and we'll talk about ISRG when I get back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Everyone, Basil Chapman, Tiger Technicians Hour. This is, let's see, Dow is down 52, S&P's only down 62 cents. This is so interesting because the S&P's been so much stronger than the Dow. This kind of discrepancy doesn't happen very often. It's usually a foreteller of a divergence in the market that you have to respect. Even though the Dow's only 30 stocks, they are big stocks. GE, Caterpillar, IBM, maybe UTX tomorrow if it pulls back. We're going to watch this real closely. And we've got online, we've got Freeman from Dallas. Hi, Freeman. How are you?
Pretty good, Buzz. How you doing? Hey, Buzz,
I'm well, thank you.
The TX revenge trade did work out pretty well.
Good, great.
I'm trying to bottom fish FSL. What do you think for a pop here because of that very low stochastic?
Okay, so what we're looking, folks, is at Freescale. It's so funny that you mentioned this. I haven't even heard the word Freescale semiconductor for ages, and then over the weekend, my tennis partner just happened to mention Freescale. I thought, I couldn't even remember the symbol. I thought it used to be 4 letters, but it's 3 letters, FSL. So I just redid the notation right here. It's making a left side, right side price time match between the gap, a high of 1246 on the 29th of January. Following day, it spikes up and the low is 1340. Where did it go to today? It went to 1235. 1235 is 10 cents, 11 cents underneath the high of the 29th. So it's filled the gap. That's number one. Number two, the stochastic is flattening. And number three, the MACD is trying to make some kind of an upside turn. It's the weekly chart that has me a little bit worried. And the weekly chart said that it's pulled back underneath the 200-period moving average. And that weekly 200-period moving average of the MACD down, and the stochastic pulling back to 54% has got me a little bit worried, as has the monthly chart, which keeps making this peak A and then fails and goes to an A minus. So if you like the stock the way you read it, I'm going to make the suggestion. Do you have any position at all?
Not yet.
Wow, this is a toughie, and I'll tell you why. Because everything about the 120-minute chart and the daily says, if there is a close above the high of whatever the high is today, 1282 right now, if there is a close above today's high based on this kind of candle formation, that's very good, because it says that the next level will be a test of the 1326, and then maybe 1358 will be the 9-period moving average target. And it tells you very clearly that if there's a failure and it closes underneath today's low of 1235, I don't think I would want any part of it. My guess is if it actually pulls back to the low of the day today, that coincides with the general market pulling back. So on a very short-term basis, as I said to subscribers today, I said there should be some catch-up, not K-E-T-C-H-U-P, but catch, C-A-T-C-H, in the Dow moving higher. Well, we haven't seen that yet. Well, the day is young, and my suspicion is based on a number of things that I'm looking at. There could still be a rally into the close today, but it depends on a number of things. So I'm going to make the suggestion, because I know how you trade, that you are very strict, that if it does take out the low, you will not be in it. That's my suggestion. In fact, I'm going to make the suggestion that you nibble right here. Although the weekly chart is not yet good, I can see a nice bounce, and I know that you like to trade bounces, because if it holds, it means that you're in the stock as it goes above the 200-period moving average in the weekly chart. But it would only be a small position, so a tiny position at 1268. And I must tell you right now, I wouldn't even give it more than 1252. If it takes at 1252, I'd wait and try again some other time. But that's my suggestion. So tiny little position. If it breaks and closes above, you can add a little bit more if tomorrow at 10:30 the market is up. So I hope that helps you, Freeman.
It does, thanks.
Thank you very much. Folks, stay tuned. You've got Larry Pesavento coming up. Fabulous program. Great technicians all day. And I'll be back tomorrow. Thanks for being here. Dow's down 36. S&P's now up $1.20.